Hello and welcome to today's video of bank reconciliation statement. We are seeing case number 4 wherein we are starting with an unfavorable passbook balance, and today we are going to solve another question, so let's get right into it. On 31st Jan 2015, the passbook of Shri M.L. Gupta shows a debit balance of Rs 41,000. Prepare a bank reconciliation statement from the following particulars. Okay, since they have not given us any cash balance, this is a direct instruction to you to prepare your cash book starting with your passbook balance. So let me write down my balance as per 41,000 in my minus column. So the first transaction is checks amounting to Rs 15,600 were drawn on 27 Jan, out of which checks for 11,000 were encashed. Okay. So the difference between 15,600 and 11,000 is 4,600. So checks amounting to 15,600 were drawn, but only checks worth 11,000 were encashed. That means checks worth Rs 4,600 are not yet encashed. That means our passbook balance is more than our cash book balance. And if I want to tally the two, then I will have to deduct this 4,600. So let me write down. Less. Checks issued, not yet encashed. 4,600. A wrong debit of Rs 800 has been given by the bank in the passbook. Okay, so that means wrongly 800 rupees have been deducted from my passbook. That means my passbook balance is lesser than my cash book balance. And if I want to equalize the two, then I'll have to add back this 800 to my passbook. It has wrongly been deducted. A debit in a passbook means a withdrawal or an expense. Okay. It means money is going out from this passbook, from the bank statement. This is again the opposite in your cash book, wherein if you have any expense, it will be shown on the credit side of the cash account. Okay, don't get too confused. Just understand that a wrong debit in your passbook means money has been deducted from your bank account. Now this has not been recorded in the cash book. I mean, it has wrongly been debited, so there won't be any entry also in your cash book. So your cash book balance is more than your passbook. And we want to equalize it. We're doing it from the POV of the passbook. So we will add. I will write here amount wrongly debited. ₹800. A check for Rs 200 was credited in the passbook but not recorded in the cash book. Okay, so what this means is in our bank statement we have 200 rupees more than our cash book. And if I want to equalize it, then I'll have to deduct this amount from my cash book. So in my less column, check credited not yet recorded in cash book. Rupees 200. Checks amounting to 21,000. Checks amounting to Rs 21,000 were deposited for collection, but out of these, only 7,400 have been credited in the passbook on 5th February 2015. But out of these checks for Rs 7,400 have been credited in the passbook. So what does this mean? Okay, so what does this mean? Checks for entire 21,000 were deposited. Okay, but out of this 21,000, checks worth Rs 7,400 were credited only in February. That means our passbook balance as on 31st Jan 2015 is lesser by 7,400 than our cash book. And if I want to equalize the two, then I will add it. My cash book has recorded entire 21,000, but in my bank, only about 21,000 minus 7,000, only about 14,000 has been credited. balance 7,000 was credited in the next month. So that means my cash book is more than my passbook by 7,000 rupees, right? And if I want to equalize the two, then I will have to add 7,400 in my cash book to my cash book to my. So then I will have to add rupees 7,400 to my passbook to equalize the two. Check. Deposited, not yet encashed. 7,400. A check for rupees 1,000 was returned dishonored by the bank and was debited in the passbook only. Okay. So what does this mean? A check has been dishonored by the bank and that has been deducted from my passbook. So my passbook balance is lesser than my cash book balance. I have not recorded it in my cash book yet. I have to record it. But now since I'm preparing this bank reconciliation statement from the point of view of my passbook, I have to match my passbook balance to my cash book. And now in this case, my passbook balance is lesser by 1,000 rupees than my cash book. And if I want to equalize the two, then I'll have to add 1,000 rupees to my passbook. And that's what I'm going to do. Check dishonored, 1,000 rupees. Interest on overdraft and bank charges rupees 100 not entered in my cash book. Okay. So this is similar to the previous transaction in which my cash book balance is more by 100 rupees than my passbook. So I will have to add back this interest charge to my passbook balance. Interest on overdraft and bank charges 100. So a check of rupees 500 has been debited in the cash book, omitted to be banked. Okay. So what does a debit in our cash book mean? Debit in our cash book means an income. Okay. Debit all whatever, I mean, the rule is debit all expenses, credit all incomes, but in our cash book, in the cash account, but in the cash book, on my debit side, I will record all my incomes and all my expenses. All my expenses are recorded here and on the credit side, and while all my incomes are recorded on the debit side of my cash book. Now they are mentioning that a check has been debited in the cash book. That means I have received money and this has been omitted to be banked. So what does this mean? This means that my cash book balance is more than my passbook balance. And if I want both of them to equalize, then I'll have to add this back to my passbook. I have to add this to my passbook balance. Check received not banked rupees 500. Now let's calculate the balance as per our cash book. Minus 41,000 plus 800 plus 7,400 plus 1,100 plus 500 minus 4,600 minus 200, which gives me a total of 36,000. And since it's a minus balance only, I will write credit. If you have any doubts, please feel free to reach out to me in the comments. See you in the next video.